Hi, folks. It's Aidan CryptoBurb speaking. It's Friday, which means that we're actually welcoming you on today's Friday webinar. It's an excellent, beautiful day to discuss Bitcoin and whether it actually is closer and getting closer, more resilient towards, well, fulfilling the $20,000 prophecy or the $30,000 and beyond. If you're ready to hear this and more, make sure to stay tuned. We're going there right in a second. How's it going, everybody? This is Adrian CryptoBurb speaking. Beautiful day, beautiful Friday. A little bit of technical issues for some reason with my camera, right? I wasn't able, apparently it has to do with some macOS, updates or whatever. It would not launch. So excuse a little bit of delay. I hope you guys are doing okay. Please let me know where you're writing from. I'm really curious. I'm always happy to learn how you are doing. What's the weather up like where you are? What's the temperature? Are you boiling hot or are you freezing like the people in the high north, right? This is getting crazy, of course, as we're getting, closer and closer to the summertime, which is typically slower in the markets. People enjoying vacation, taking time off, basically translates to lower engagement in the markets, less interest and lower volume, less demand. Prices more likely to go down or sideways instead of kind of like climbing higher, right? So it may seem innocent, however, there are so many implications. Netherlands, 20 degrees from Armand Habit. So sorry if I didn't pronounce it well. I'm really curious how it pronounces. Johnny, there is the Johnny 55 Ireland 15 overcast. Beautiful. There's Jack Walker. So sorry if I guys mispronounce your names. I'd love to hear how it actually pronounces properly. Feel free to instruct me in the comments. I'm really excited to talk to you, right? This is a good pronounce from Armand. Okay, good to know. It's a bit of sunny here in Netherlands, but no high temperature yet from Bernd Leg or Lagu. So sorry if I'm terrible pronunciation, and you guys have very fancy, beautiful surnames and names. So I'm probably doing a little bit of harm on your names there. Sorry. Warmer weather late this year, starting to get warmer. That's right. Marcia Vegas. You know how Portugal weather is. That's correct. I do perfectly know. It's beautiful. Yeah, very good, very good. Happy to have you guys. Congratulations again on tuning in. This is important that you are tuning in, right? Because it not only shows me that you want to learn, that you want to improve, and it actually shows to yourselves, guys, right? You are very engaged and busy to actually make something better, to learn how to actually overcome the losses and start being profitable over the longer journey. It doesn't take, it's not enough to become profitable once, right? It's just like you roll the dice in a casino and you win a jackpot. It doesn't make you a good gambler, basically, right? You just got lucky. So confusing and mistaking luck for skill is actually one of the deadliest mistakes in the trading that is going to definitely leave you broke eventually, right? And ruin, in financial ruin. We don't want to do it. And because of that, you are basically in the right place to get a little bit of a tutorial workshop. We're going to have a couple of different outlooks today, right? And it's a very, very important day. And I'm actually very excited. You can tell that I'm smiling a lot. And there are so many reasons. One of those is that I see you guys. Please feel free to drop some comments and questions if you're watching that on YouTube. If you're not watching that on YouTube, make sure to head over to our The Burb Nest account on YouTube. Hit the subscribe button, smash the like button as well. Drop some comments if you have any, and make sure to stay notified with the thumbs up, with the bells on, and with all of those different nice emojis and interactions that you can have up there on YouTube. Okay, let's get it rolling, right? So in order to discuss Bitcoin and whether it actually chases 20K or 30K more closely, I would say that we have to put Bitcoin in the right context, right? Which is why you may often see me do an intermarket analysis overview, right? So instead of jumping in chasing straight and right into Bitcoin, I would first and foremost have a look at what is going on around Bitcoin. Obviously, we as market technicians, as a chart market technician, I'm taught to assume in a way that the price has memory, that the chart tells you the whole and full story, right? However, it's good to sort of make some more informative opinions, decisions, arrive at more and better, more accurate conclusions. You'll have to get more knowledge, and by getting the more knowledge, it means basically that you have to dedicate to analysis on what's going on outside of Bitcoin as well. Hope that makes sense to you guys. So let's jump in. First of all, and well, actually, before we roll, this is something that I wanted to show you, right? We just got this cool, extremely nice looking golden badge, right? The Burb Nest right now is golden badge. There is no way you can confuse that with any other brand, basically, of the scammers, right? There are so many scammers and impersonators that solves the issue potentially and hopefully, right? So the golden badge is with the Burbness and this excellent fancy looking golden logo to match and come with it. That's pretty excellent. And you can also check again, there is an affiliate golden badge and an affiliation badge of the Burbness, right? So by clicking on that, 100% correct and well that you're talking to the right Adrian, that you're talking to the right person, to me, instead of scammers impersonators. That's valuable. I also got a little bit of a nice thread and bookmark, right? So many people actually bookmarked it. Having the thread about why being bearish in 2023 sucks, right? And long story short, it is about denying the reality. So denying the reality means that there is a lot of cognitive dissonance, right? When there is an opinion clashing and kind of like different from what you have, from what you know, it's going to conflict. You have the so-called mind fuck, basically. And cognitive dissonance is a more professional and formal way of calling a mind fuck, right? When your mind is fucked in a way, right? Basically, you're looking at a chart and there is a little bit of, dissonance, right? There's some clash of the views that you held previously with the ones that are right now. And if you choose to disregard them, ignore them, or undermine in a way so that you kind of like, pass along, just let's ignore that, let's forget, right? It's not relevant, it's not important. This is what happens, and there's a psychological process behind it, right? For all those ego defensive biases, and this is an actual bias, this is an error, right? And understanding that this is a cognitive error, something that you can work on, actually helps you set yourself apart from other traders. Because guess what? 90% of traders, those who continuously lose money, are those who completely and constantly deny the reality. So by rejecting this information in the name, or actually for cognitive dissonance, you trade a chart that you have in your mind rather than the one that actually exists, right? Let that sink in. This actually hits different and strong. So feel free and kindly encourage everybody to go ahead and understand why chart patterns work, basically what the levels are. We're going to briefly discuss it as well. However, if you're not familiar with that yet, excellent shout out to my friend Jeff Hirsch, who's an excellent strategist for anything that regards seasonality. Beautiful charts, beautiful intelligence up there. Make sure you go ahead and actually follow him, right? Right there, he's an excellent person, Jeff Hirsch. I kindly recommend that you actually go and visit his profile. Incredible insights. We're in the bullish context. 2023 is supposed to be a bullish year with 98.8% probability rate. This is actually pretty sick. So if you have less than 2% of chances of winning on betting negative on the year, well, would you really take this bet, right? If you have almost 99% of chances being right historically over past 84 years, would you take the opposite bet, right? I wouldn't. I would not, right? Future will show, who's actually right about that. I have no idea what's going to happen, right? If we go to 50K, 100K, 500K, or zero, I have no idea, right? We can only talk about probabilities and average. Take the averages over many years to get a little bit of benchmark data. That's it. Kindly recommend everybody go ahead, check my profile. It's a pinned tweet. I pinned it for now. So feel free to go ahead and check it out before I take it off my Twitter. So speaking of the market summary, let's have a look. What is going on? What is going on, everybody? So we're looking at, Dow Jones Industrials, right? You can tell that, first of all, the major markets are half in the red, half in the green, right? DAX is actually making new all-time highs. This is a powerful breakout. Just have a look. This is a powerful breakout with a decisive breakaway gap out of this beautiful consolidation, like an ascending triangle or something, whatever. Beautifully held levels up here. This is like a masterpiece of technical analysis. Just have a look. Magnificent. And I have a resistance breakaway gap, a very powerful breakout, strong, still have some time, still will stay, have some time until the daily close, session close. However, it's looking really, really good and powerful. All the trends are moving up. 200-day trend moving up, bull market. 50-day trend moving up to reinforce that, and short-term trend to kind of like give you a little bit of short-term narrative. Also going up. Very powerful chart that I would never in my life dare short it. Again, industrials, right? Industrials, as we were looking at it, is looking a little bit more confused, right? It's definitely looking at nowhere near as strong as DAX. Here, the 200-day trend representing the bull market or the bear market is actually improving. It slowed down just a little bit recently. However, it's overall representing an inclining tendency, basically naming a bull market, right? Still, of course, there's lots of sideways. We still want to see some continuity and perpetuity, or continuity, I should say, probably the better word, in the direction of the breakout, right? But what could help to the industrial average, as well as the Dow Jones Transportation, which is the chart at the bottom, we would probably want to see a factual breakout over 35,000 points eventually, right? That seems to be this level that needs to be cleared. That otherwise kind of like puts us in the context of some sideways move, right? We're in this major sideways move. Of course, we have a very credible, reliable bottom for October on the Dow Jones Industrial Average, as it often happens, right? August to October is typically the best probability to spot the stock market bottom, and that's exactly what happened, right? So I would say, again, we are moving in a sideways, kind of like a theme. The average is slightly inclining. However, we want to see this actual action of the bars, bar action continue higher. So it's definitely reverted, and it's taking some time. It's not definitely rushing, to give you some profitable journeys up there, right? If we go to S&P 500, what it actually gives you, let's refresh this chart, right? It's actually refresh this chart. I'm using StockCharts, by the way, great platform. I'm not affiliated, and I just enjoy using that. Let's let's use the other chart to watch this portfolio. Let's go to this one. S&P 500. Give me S&P 500. Is it this one? Is it going to be this one? No. Give me another chart. Give me another chart. SPX should be this. There you go. Of course, right? So we are looking at an overall confused sideways tendency over the past, again, year, right? The whole year of price action, basically for S&P 500, the large cap index, shows you price theme that is sideways. On the contrary, the moving average, again, similarly continues to climb higher. However, it slowed down recently. Maybe it's just going a little bit flat. Otherwise, we're looking at an attempt of a breakout to the upside over critical resistance of 4,200 points. This is a magical number. People love those round numbers. They are easy to remember. You would admit, probably, wouldn't you, that it's easier to memorize 4,200, 4200 rather than 4201.67 period, right? The easier the number, the number in the round there, the number is, the better we remember that, the more we remember that. And as a result, the more we anchor towards the level, right? So again, a lot of sideways influence impact, which is not constructive, combined with an attempt of a powerful breakout, right? So we may actually see this powerful breakout. It's a little bit on the line right there on the fence. It's tilting, you can see this local doji. Of course, the session is not closed. However, it's not a straightforward immediate move up, right? It went up a little bit. It tilted to the upside. However, it's not closed above it just yet. We want to see consecutive close higher. If it does close higher, this is a confirmed breakout. We want to see it go there. And then if we have a look, then a measured move actually takes you at least to about, what is the distance? 4050 all the way to 4200. It's going to be 150 points, right? So it's taking us for the measured move somewhere around 4350, right? Of course, matching the previous resistance level. So there's a lot of reason, a lot of, I should say, again, benchmark expectations to let it go right there as a next target, which is because we make those targets exist, we make technical analysis work, we make the patterns work, our beliefs translate to actions. I would say that it's possible that we actually see them moving in that direction, provided that we see a follow through to the upside. Other than this, if there's some ugly major breakdown, right, and a fake out, then it's naturally going to promote more of a mean reverting move to the downside, potentially towards the 200-day moving average area around 4,000 points. Right, so that's it. It's on the line. However, there has been an excellent attempt of a breakout, and that is a minimum target, right? 43.50 is a minimum target, because a major pattern that is actually the one that we're talking to is about what is that? 400 points bigger, right? So 400 points of a measured move, basically taking you from here, places you somewhere around 4,600, basically, right? So big odds that we actually go and continue higher, especially that we get to see about 20% average return in the pre-election years following the bear market midterm bear markets, right? So the benchmark expectation over the past 84 years is 20%, 20 freaking percent on average to the upside from the yearly open. Okay, so this is pretty good odds. Are you with me, Gabe? Are you with me right there, guys? Please let me know. Shemka Arkadiusz. What are we looking at? By the way, if you're reading that, make sure you actually see right here, right? We have this pretty cool link, and you can get our profitable trading calls for free at no charge, basically, right? No charge included, no money. Of course, you can choose to pay money if you wish. However, we partnered up a long time ago with Bybit, with our official partner, that they actually, for following a very simple instruction, you can unlock even a year of our profitable trading calls for free at no charge. This is a game changer. This is a no-brainer, and you can actually get it for free. Like I said, all those profitable trading calls, and there are so many. Oh, there you go. That's the mistaken area. Anyway, so I'll show you the launches how it looks. You can actually again get this for free, right? So without further ado, just have a look for how it works. Right, you have so many profitable calls. Some of them are discretionary from our excellent traders, excellent crew of traders, very experienced people, and amazing brains, way smarter than I am. And then you have the official calls from our profitable strategy that is automated, right? That you can use for short-term signals. So it's pretty cool. You can get it for free for registering with this link right here, thebourbonist.com/Bybit. Go ahead, check it out, give it a try, and you're going to love it, in my opinion. Shall we get it going? What I also love to watch and observe is the XLY versus XOP ratio. This gives me a little bit of an insight into the risk on versus risk off environment, right? So this breakout that we had yesterday was a strong breakout. It was a strong breakout. There's a little bit of a down move. It's not a directly tradable asset. However, what it tells you, it's by observing the trend, you can figure out, right? So rather than focusing on those tiny local bars, this is just a way of visualizing the data, you want to focus on the actual long-term trend, right? So in fact, you can turn off the bar chart and just leave the trend line alone, the blue curve, the line that represents the trend. And what it tells you is that for the 2022, there was a continuous decline representing the bear market as the XLP was gaining strength over XLY, and XLY is a representation of discretionary goods, right? Which is something that is upon your discretion. If you're feeling good, if you have money, you can discretionary choose upon your discretion, basically, to buy a car, right? So Tesla would really be long under that category. Or on the other hand, you would have XLP, which is basic goods like beverages, food, clothes, right? So something that you need regardless of the season of the year. However, if the season is good, you would choose the discretionary goods, which is XLY. So demand inclines whenever you feel good about what's going ahead. Potentially, what do you expect the future to be? This naturally builds up the demands for discretionary goods and boosts the prices of the XLY ETF fund, right? Representing the discretionary stock group. And this is a direct comparison, the relative strength chart, right? The relative strength ratio, basically telling you that there has been, of course, since 2023, a significant change and a shift, right, in the market, a significant upturn. There's been a little bit of fluctuations around the relative support, if you will. Otherwise, we are looking at an overall change in a trend. There has been significant shift and slowdown, right? It's not going up just yet, so it's naturally not telling you, okay, it's a full risk on, everybody is just bullish, right? There is change, there is much less bearishness on average when compared to the bullishness, because this is a risk off, risk on environment, right? Risk on, risk off environment. So that's what you want to see. Yeah, of course, you want to have a look on what's going on with the long-term bonds, right? So the Treasury 30-year bond prices, which are driven by the expectations of investors, those are actually going climbing a little bit lower. Let's actually refresh the chart and see if it holds true. Yes. Now, then the dollar chart is actually giving you a little bit of a bullish vibe locally, right? It seems that the month is going to close higher, at least being past midway through. We'll see, right? Still have some time until the monthly close. However, there's been a significant breakdown and a fake out over the 104 points as the critical kind of like a box resistance, right? So arguably the target area hasn't been reached. Ideally, there are no ideals still. So I would expect again us to dollar typically reacts negatively, right? Whenever there is a decrease in the interest rates, right? So I would expect the dollar to kind of like chop around when there is this inflection point on the interest rate tightening or the monetary tightening policy interest rate boosting, right, by the Fed. On the last FOMC meeting, there was no indication that there might be more interest rates, so they're kind of like giving themselves a little bit of space to withdraw, and if they decide it's okay to withdraw and stop tightening or even start easing, right? So we'll see about that. However, we are looking at this kind of like a breakthrough moment, right? Which gives you inflection point, and the inflection reversal process takes time, right? So I'm expecting a little bit of sideways regime for the next couple of months, a little bit up, a little bit down. There's some relative support about 50-month average long-term value of the dollar versus other currencies at 98 points approximately. Hope that makes sense. The yield curve obviously is inverted, right? That's something that has been that I've been repeating for months already. It's inverted in the very, very aggressive and a steep way. It's the deepest inversion since 1980. So most likely we're not going to be able to escape our recession. However, luck has it, or the history has it, that the markets often pump during the recessions, right? The recessions tend to be bullish, and recession again or expansion, those are economic conditions, right? And economic conditions are different from financial conditions. Those are two different cycles. Financial markets actually lead the economy by 6 to 9 months on average. However, economy cannot be bullish or bearish. There is no such a combination. It's a complete failure to understand, how the things work, right? So the economy is not bullish or bearish. The markets, fucking hell, the markets can be bullish or bearish, all right, but not the economy. Bullish markets, as in the stocks, whatever, they can ramp up and heat up the economy as a result of being bullish, right? And then the economy starts expanding again. Otherwise, if the markets are bearish, then what we're looking at right now in the economy, in this steady decline and an overall, again, lack of expansion, that may end up like most likely with some hard landing, anytime later this year or next year. Then we're looking at the effects of the last year's bear market. As simple as that, right? So please make sure you read about that, if you will, of course, right? Economy is not bullish or bearish, right? As simple as it gets. So then how it all translates to Bitcoin, right? We want to have a look. There is one more chart that I wanted to actually show you. This is an ACP platform, also on stock charts, right? So what I'm going to show is out of my list, take it out. And I'm going to find the chart that is called, what is it? Main chart. The main chart, what does it tell you? It tells you that Bitcoin locally and lately has been trading inversely to the stocks on average, 7-week average basis. So medium term understanding of the results are telling you that on average, Bitcoin is slightly trading against the stocks, which is pretty interesting, right? Most of the time, Bitcoin, as you can tell, clearly trades above the zero neutral line, which expresses no correlation. positive correlation, right? Especially because it gets to the maximum 1-0 level. And the more it tells you that there's two assets like Bitcoin and stocks, S&P 500, right, move exactly the same, ideally the same. So it's never going to get literally one, right? It can get like 0.99, 0.98 or so. It can also get -1 or close to -1, right? Which means perfectly, ideally reverse, right? Like a mirror reflection. It rarely ever happens. And for Bitcoin, you can tell that over the past 2-3 years, we had only had like 1, 2, 3, 4, 5, 6, 7 instances, or 8, right? 8 instances over the past of couple of years. When compared with the whole, basically 99% of the time being, in the positive side, right? So it tells you that most of the time Bitcoin trades exactly the same or similarly than to what the stocks do, S&P 500 does, and at times, occasionally, it actually does trade inversely, right? So if you have a look, of course, there is no rule. If you have a look, and when that happens, typically, I would argue, around the bottomish areas, right? So again, there is of course some forecasting issues, so we can never be sure of the I would argue, again, the future results, right? The future is never a guarantee of future past is never a guarantee of future performance. However, most of the time, as I would argue again, that if we have a look at those chapters of negative correlation, we looked at the market bottoming out, right? So that perhaps is something that you might want to be aware of, something that you may want to reconsider, see about that, right? Because it directly tells us what is going on with Bitcoin, right? Well, so what we can see is, of course, some steady volume decline, which is not something that is surprising. It's completely fine. It's okay, right? The more sideways, especially in the sideways, right? We see less volume as traders deactivate themselves. They withdraw due to the loss aversion. They hate losing. They feel uncertain, so they will review their positions. They will withdraw some money, withdraw their bids, right? Hence, it reduces the supply, reduces the demand locally, and causes the volume to slow down, right? So it's natural, and most of the breakouts happen on actually lower volume, right? So this is pretty much normal. Other than this, the main support resistance level, I would argue, that is 25,500, right? Previously held support, then turned into resistance, subsequently rejecting a couple of times. Then it serves as a support again, right? So the polarity has flipped successfully, it seems, right? Until proven otherwise, of course. The 200-day moving average provides us with a little bit of magical anchor. We love those points of references, right? If you have a naked chart, you have no idea basically about if it's bullish or bearish. But if you lay over the 200-day moving average, all of a sudden you kind of like just start anchoring, right? This is called an anchoring effect. So it serves as your point of reference, as your frame of reference. And basically you say, okay, anything above it, maybe it's expensive. Anything below it, maybe it's, cheap or something like that. So it makes our lives easier, right? And because, not so much because I say so, but because people use that, right? So many traders use that, actually. So many traders fall for this anchoring bias. We love to anchor ourselves, right? One of the example of some socioeconomic kind of like stuff was, if you, the anchoring effect comes into play when you try to face your uncertainty and give an evaluation and judgment over quantity when you have no idea how much of that is. So imagine a box full of beans, right? Or some beads, right? Imagine there is like 5,000 beads in that, right? So just because I said 5,000, this becomes your anchor, and anything you say, now I'll say I'm wrong, right? So what your mind is going to do is you're going to take my guess of 5,000 beats or pieces or whatever, and you're going to weigh in higher or weigh in lower, right? Depending on how you feel about that. So it becomes your anchor, and I can be extremely wrong about that, right? Or how much fuel there is in a rocket starship, or a starship or a rocket, moving to or flying to Mars or something. I have no completely idea about that, right? Because I'm not a rocket scientist. So I would never be able to guess properly. However, if there is any sort of like anchor, any number, anything, said by anybody in the first place, then I'm going to anchor myself to it. Then finally, another example of an anchoring effect is there was a poll that was exercise, right, on some university or something, run by psychologists, and some people of different age, elderly people and some younger people, were asked about the price of wine, and they got introduced to the saying that the price of wine is going to depend on their birth date, right? I mean, the year that they were born in, which is the number. So if you correlate somehow and tie up the number or the, standing to your birth date, as in the year that you were born, then the older people were giving higher prices evaluation for the wine bottle, right? Because naturally their birth date, consisted of more years of living. So they were older. And because of that, they would pay more for the same bottle of wine than the younger people would do. And that's the same bottle of wine, which is objective, right? So it's only our subjective viewpoint that is actually anchored irrelevantly. Because what is the correlation between your age and a bottle of wine and the cost between it? Of course, there's none, right? However, it's our brain that creates those paths, creates those mental maps somehow, right? Those mental frameworks that basically cause this anchoring effect. It's a very interesting thing, actually. So this is why so many people use that, right? It's not so much that I think, okay, this is like the infinite or the definite price of Bitcoin and I'm never going to buy, until we get there, because that would be an example of anchoring. So instead of that average, because many people use that, I would say that this can pose and give you a chance that if Bitcoin goes there, it may actually bounce around that area, because many people will believe, okay, this is an anchor, this is where I buy, and as a result, they will lay over the bits right there, right, believe below that level or around that level. And guess what? If the price actually closes, happens to go down there, it's going to exhaust the orders resting right there, the limit buys, right? And as a result, the market is going to turn facing the barrier in the first approach, right? So that's how it works in practice. So regardless of what's going to happen here, right, you could argue that there is this considerable support area at around 22,500, which is something that I would personally buy, actually, if we get there, right? Not so much because I believe it has some magical powers, but more so because people believe that. Other than this, the baseline 200-day baseline average of the Bear Pro, this is the core line of my private trading system that is called Bear Pro. You can actually read the whole full documentation if you go to theburbinist.com. Exclusive desktop, if you go to theburbinist.com, you're going to have a Bear Pro tab, right? You can scroll down a little bit, and there you have the full Bear Pro guide. And you can read about Bear Pro, full disclosure, again, how the system works, the full information, full documentation for you, many pages of information about the systems, about different divergences for how things work. So you can go ahead, it's public knowledge, you can go ahead and have a read about that. Right. Other than this, that's a system that I personally use, and what it tells me is that the long-term average that is much more adaptive than a simple moving average. It tells me that a fair price of Bitcoin is right now around what is it? 26,200, I would argue, right? So we're kind of like, again, stepping on a thin ice. We're walking on a thin ice right here, closing and kind of like crawling into support at the edge and at the verge of the head and shoulders pattern, right? With the left shoulder higher than the right shoulder. It's a pretty good example of a head and shoulders pattern. We never know which way it actually resolves. Maybe it will result to the upside, maybe it will result to the downside. Right? We have no idea about the future. We only know the facts. Facts are on the left-hand side. Opinions are on the right-hand side. And most of the time, the opinions are wrong, right? If you guess it, it's not because you are a fortune teller. It's because you got lucky. I used to think otherwise, right? However, I was wrong, of course. And I lost money. So having this head and shoulders, arguably, again, because many traders use this technique of a measured move, I would argue that we have the chances to actually measure a move from, again, 31,000 all the way down to like, see, 26,000, 27,000, right? Whatever that is. So the size of the head is actually your potential measured size of the movement, right? So if it breaks down in a credible, reliable manner and just dips and closes below $26,000 at a confirmation, which will also be a confirmation of breaking the 200-day trend line provided by the Bearish Pro, where it takes you $5,000 lower approximately, or $4,000, right? So 26 minus 4 is approximately 22, 23. Again, those are the round numbers, and 22,500 is 200-day moving average. Do not forget that, right? So there is a lot of reason why, if it breaks down, I would expect it to go somewhere between $22,000, $23,000. Other than this, it may also flip us, wrong, right? It may also play us like it's crazy, right? Give us a little bit of a tease, maybe break down a little bit, and then immediately climb higher, right? If that happens, this is a failed breakout, and failed patterns tend to perform better in the opposite direction, because it forces all those trap traders right here with the freshly opened shorts on the breakouts to the downside, right? That they have to cover, and they have to cover most likely because they are over leveraged, because they rush into the positions, right? So they will have to close. Closing shorts, covering shorts means buying back higher on leverage, right? So this naturally comes up with, again, spike and injection of the volume liquidations. That's what you basically call a short squeeze. Hope that makes sense, right? Other than this, again, we are looking at the declined volatility, right? Declined volatility, which is 50-day average, the blue curve, right? 50-day ATR. We're moving with the black dots below the average. We're underperforming the 50-day trend, right? So we're basically, it tells us that the medium-term trend perspective has expired, that the trend has expired and has been exhausted locally. So what it tells you, it doesn't necessarily tell you that it's going to reverse and go to zero tomorrow. What it tells you is that it's locking this steam, that it's kind of like run out of steam, right? So unless there's an actual injection of this fuel as steam, there's some news or fundamental change, or some politicians say something, Elon Musk say something, whatever that is, we have no idea to know that. So unless some unpredictable event like that comes up that is bullish, I would argue that there are technical reasons to believe that it actually may fall lower into the quarter three, in this lower quarter, right? So I would see a lot of reasons why it can actually just go lower. Other than this, the trend is up. And if the trend is up, I'm bullish, right? Because this is a long-term representation of a valid, long-term, reliable trend. If it climbs higher, I would never concentrate it as a trend follower, right? So that's my 2 cents. Here is a cleaner chart and the perspective of the 200-day trend. Moving average, again, 22, 500, 23,000. People love, again, we love those round numbers. I love them as well. I so much more prefer to wake up at 8 a.m. rather than 7:01 or 8:01 or something, right? Or 6:01, whatever the time is. Because our brains function better, right? So we love those anchoring effect somehow in practice. I would argue that the three relevant numbers that matter are 26,500, which is this neckline, 3,100, which is the highest, and around $22,000, which is the round number combined with the back up of the 200-day trend. So if we ever get to the downside, right, I would say that this may work as a magnet if we ever get to the upside, especially with the failed breakout that gives you a little bit of more bullishness locally, I would argue, right? So if I were to guess, I would bet probably a little bit more on the upwards resolving. However, I'm not guessing, because that would be my opinion, and I do not trade on my opinions anymore. I trade on patterns. I trade on trends, right? I'm a trend follower, so I'm following a trend. Trend is up, I'm going up as well, in the direction at least, looking up. Then if we have a look at a shorter term chart, this is a medium term chart of the 4 hours represented by the BPRO momentum bands. So you can tell there is some similarity between the Bollinger Bands and the momentum bands of Bearish Pro. Those are different. Bollinger Bands are based off 20-day moving average. The momentum bands are based on the baseline. The baseline is an adaptive moving average, right? Which is the one that is actually replaced here. And it's much more sensitive than 200-day moving average. If you think about that, if we highlight the 200 moving average, which is the one that I just displayed, the actual breakout signal of the or the actual bull market reversal confirmation, that it got was for the line representing the bull market started going up, which is basically right here, right? Which was in March, mid-March, and the line started going up for the Bear Beginner Pro that is more sensitive in early January, right? So the 3-month or 2-month log basically means that if you were a trend follower based on Bear Beginner Pro, you would have bought into Bitcoin in early January, and based on less sensitive arithmetical average of 200-day price action, you would get into Bitcoin to start moving up for a long-term confirmation of bull market in mid-March. 2 months of late being, right? That's a big cost. If you trade with millions, that's a cost of lost millions of opportunities, right? So yeah, otherwise the breakout objective, arguably for this major pattern between 25,500 and 15,500, right? It takes you 10K to the upside of the measured move rule, right? So 25,500 plus 10,000 takes you to 35,500. Approximately, that becomes the magnet, the objective again. That's because we make it work, and because we make it work, it really works. Other than this, it's got kind of like stock, I would say in Bitcoin, it's definitely testing and playing around, flirting around with the area of the 2022 or 2021 close clusters, right? $30,000 was the area. So it's got rejected a little bit there. Technical analysis 101 again. Right? Please let me know before we wrap up the show if you have any questions. Again, if you're new to the channel, make sure you subscribe, hit the notification bells, also that you stay notified every time we put out new content and video like this one, this webinar. Again, you have an opportunity to activate your free membership with the Burp Nest with profitable trading calls and signals, right? And you can get it right here. Go ahead and sign up with the link right here at theburbans.com/buybit. Go ahead right here, or check the video description if you're watching that on YouTube. We have a link for you right there as well. And it not only gives you trading bonus, lower fees, and all the stuff that you get with Bybit, it also actually gives you access to our product for free. Isn't it cool? Then to wrap up the show, right? My private trading system, that is the main and final comment. Dual trader price system that I use. It's actually in a bearish mode still, right? Ever since faking out a little bit of a trade crowd, I made a mistake of entering unconfirmed signal earlier, or late last month or late this month, right? Either way, there is a daily trailer trend that is adaptive based on adaptive ATR, adaptive volatility breakout level, right? So it tells you about the reliable support or resistance levels. Right now, the resistance reliable on the daily time frame is about 30,000. It's 29,661. So a strong close above this one is actually releasing a bullish momentum and thrust on a series basis, right? And is likely getting us out of this trappy and shitty sideways. Other than this, we are in a bearish tendency right now on a daily, right? Bearish tendency doesn't mean it's bearish. It means that it's basically bearish according to the trailer, according to the volatility. And it tends to get and flip bullish to bearish, all the time in a sideways move. So this is typical to get, minor losses when you're a trend follower, just like I am, in the sideways, because you assume that the trend will continue. And if it reverses it, basically you are wrong. Right? So I'm wrong 70% of the time. I'm right only 30% of the time. However, if I'm right, I catch those long tails that take me from 17 to 21 or 22, that take me from 22 all the way to 29, and so on and so forth. So I allow to myself to get chopped a little bit for the sake of having those long-term, those longer rallies and trails. So daily bearish tendency setup. Medium term that I trade, the 12-hour is also bearish with the stop at 27,716. So when I see 27,716 broken to the upside heavily, I would give it a $28,000 as a benefit of doubt. Round number, again, that's how our minds work. Strong break to the outside, I would say that the next potential target may be around 29,600 or $30,000 otherwise. And a positive, strong breakout over $30,000 arguably releases us free. The bulls get unleashed, right? Other than this, we are in the bearish mode on the daily and on the mid-daily. So there are some local chances that we actually break and resolve to the downside locally, which is going to be perfect bull buying opportunity. Other than this, ladies and gentlemen, I think that's it. So feel free to go ahead and have a look at my private trading system. It's actually explained very well here. The Bearbeater Pro documentation is online. It's free. You can have a look, download it, read it, befriend it, and you can also access and buy in the this profitable toolkit. Right, it's a toolkit with many indicators. So it's not an indicator. It's tons of custom indicators that are designed that you can combine all of those together to give you very profitable systems. And you can go and have fun. Go enjoy and have fun. Other than this, again, I'll go ahead to my Twitter account. Get on the pinned tweets. That's the thread that is actually pinned right there. You may find that interesting. Do not forget that this is the legit account that I have. You can have it under the golden badge at the Bermness affiliation. That is what you know that it's actually legit. God bless you all. It's great that you've tuned in. Maybe I'll take one or two questions real quick. Let's scroll. Sierra, my friend. Sorry I'm late. Heading to Bitcoin Ireland tomorrow. All the best love to you guys to say hi and hug all those beautiful Irish people. Dum pum 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 pum. What can we say? What can we say? Alex Wells, and the dollar's been going up. Okay, it seems that you guys are enjoying that. Guys, thank you so much for tuning in. Drop some comments and questions. I need to run then. I'll do my best to answer them along with my team. Hope you enjoyed this show. I'll see you around in the next one. God bless you around. And final answer is 20K or 30K. Right now, I would say 20K. I may be wrong. However, we need to be ready for that, right? 30K, cool. Let's see about that. Just be ready for both. Be ready for both. Be ready for the worst. Expect the worst. Be ready for as well, also for the best, and you're never going to be surprised negatively. God bless you all. See you around. Bye bye.